So it's Wednesday. We get EIA numbers at 10:30 a.m. Eastern Time every Wednesday. Right now, we're about 10 minutes away from those numbers coming in. We got the crude oil market up here. We're looking at the November futures contract currently. Quite a number, right? Right at $75. We were up there at around 5 a.m. of 75.55, just to give a frame of reference. And then, of course, yesterday, quite an exciting, well, Monday, really. And we just kind of been hanging at this $75 price point. So this morning, pulling back a bit, still at $75, though. And with the EIA numbers coming in about 10 minutes, we're going to look at setting up a volatility trade. I jumped around a bit, so we look at sometimes the 11 a.m. expirations, okay? Those have a price point of 75.25 that we could use for exposure up and down. Now, that contract, you're going to have a little bit of a negative bias because you're going to be 25 cents in the money to the downside, right? But what's nice is the noons, just checking these out, so the noons have a price point of 75, and the market's cooperating in that we're literally right at $75 as we speak. Here's your bullish spread, going from 75 to 76.50. Got a $1.50 in exposure to the upside. It's costing you about $23 or $24 as we tick around. So that's all premium, right? No intrinsic value, just premium in terms of what you're paying for, the ability to hold that contract until noon Eastern time, and just basically the exact same trade to the downside, and that's costing us about $22. The difference being right now is that now we get 2 cents of intrinsic value to the upside. So you're looking at about $47.
Okay.
These are a little bit pricey, but we've gotten some big moves in oil.
We have.
And when we're at $75, percentage-wise, it's not as big of a move to move a $1.50 as opposed to when we're doing these trades at like $60, $65, right? Right. It's not bad, about $47, and that's going to represent 47 cents of price movement you would need away from 75. Now, what's nice is the dailies here line up with a very similar price. So you're going from $75. This time you got $5 of exposure.
Big number.
And, you know, if you're following the oil market, it definitely has the potential to move more than $1.50. Okay, might not be likely, probably not likely, but definitely possible.
Right.
But a lot of what you're going to be paying for in premium is the time, as in instead of noon, you got exposure until 2:30. And so the bullish trade, basically right at $75 right now. Bullish spreads costing you $31, and you're going to have a very similar $5 spread to the downside from 75 to 70. You'd be selling that spread. And these should line up pretty similar because we're basically right at 7. We're within, you know,
63.
Yeah, 63. So you're looking at 47 or 48 for the noon, okay, with a $1.50 exposure in both directions.
Right.
Or you're looking at about $63 for the 2:30
with
$5.
That's
and
a long
again,
time.
It might seem like, oh my goodness, I have $5 of exposure. That's a lot of the reason you're paying the extra money. Really, it's the time that you're paying for there, because realistically, $1.50 is kind of the most it might move. But guess what? It doesn't mean that it won't move more. And you have that potential there, and you have the 2.5 extra hours, which is really a big one because, man, oil is just jumping everywhere all time of the day.
And, you know, it's intriguing. Just as you're doing that, you can see this story over here. Oil near a 4-year high, even as the Saudis output close to record. That's what they're claiming.
Yes,
you know? So that, you know, supply and demand, man. I mean, it's like, okay.
No. I mean, the Saudi Arabia, largest producer in OPEC, right? Pumping out 10.7 million barrels a day. Just shy of the record set in November 2016. And quite a number, but that's not phasing that oil market a bit as we sit right at $75.
I guess that's going to be the shutdown in Iran. That's, I mean, that's what...
Sure, it's a lot of things, right? I mean,
Well, that market... Bottom line is we can't buy the market, and we're telling other people you can't buy that market. So that's less oil coming out of there.
The economy marching at all cylinders isn't hurting the price of oil either.
That's for
in terms of just everything, right?
Yeah. Welcome back, folks. We got a big number here.
It's always nice when we got a big number. So crude oil inventories rising 7.98 million barrels. Expectation was under 3 million, as in a rise, but expectation was looking for about 2.89 million barrels. Yet gas inventories falling 459,000 barrels. And to see how that's hitting the market, as you would expect, oil just dropped about 60 cents in the span of about 2 seconds.
Look at that gap.
So to recap things, right, whether you were talking about the noon trade, we would need about 43 cents of movement from 75. If you were talking about the 2:30 trade, you needed about 63 cents, which we basically got already in the span of, you know, really we're a minute into the news, you got it instantly off that number. And we're trading lower as we speak. Quite a number, man, to jump back. I mean, you know, you're talking about an 8 million barrel build, 5 million extra barrels than they thought would be around as of today. and you're seeing the market react, and we'll see if that strong oil market can actually face some heat at the top of the market as opposed to just climbing higher continually.
And if we pull this up, wait till you see this too, which is really intriguing. If we pull this up, I'm going to put this on a continuous contract.
And so this is the delayed quote just as we go over. We are looking at the November contract, but we're 15 minutes behind, so the market hasn't quite hit, and we'll check.
And what you're going to see here is that the day that we had that monster downdraft, with
July 11th,
oil went from 74.26 to 70.
Okay.
So it's going to be intriguing to see, how this shakes out right now. Now, I forget what happened that day, but bottom line is that that was quite a day.
I think that may have been EIA day as well.
It was an EIA day. I just forget, like, okay, was there a build? Was there a build? But the bottom line is that it's intriguing that we're right at those levels.
Definitely.
So...
Taking one more quick peek. So we're kind of just sitting at that $74.40. We'll check back in on the market, see how we react. But anytime you're making that type of volatility trade, you want to see a surprise, right? You're looking, and that's a nice number. And again, to recap, right? You could always close out your bearish spread right now. I mean, even just taking a look, this would have been our $5 bearish spread for the 230. You could buy that back and basically cover your complete trade. If you thought maybe, you know what, man, the market's just going to shake this off and go higher. Because you still have the bullish spread that would remain open, or you just kind of let it run. There's a lot of ways to manage that trade as you go, especially when you'd have 4 hours of exposure. We're at 10:30 right now, give or take a couple minutes, and those trades will last till 2:30 if you're talking about the dailies.
And let's go over and take a look at the XLE, because what has been happening is that XLE had still been having a hard time getting to higher price. Well, you're still up 26 cents.
Yeah, now this one not delayed, correct?
Right.
Yeah, so we're at a high of 77.51.
And this is, did I say it was in May that we had the downdraft? It was,
I believe it was July 11th was the day.
Oh, July, okay, okay, so that's over here.
No, it's,
It just,
So it's the, I figured it would be.
Right there.
Gap.
Okay,
no,
that's June.
Maybe somewhere around here, right? I believe that was the day,
So, they're still having a tough time at those levels, which say quite a bit, basically. So we'll see where that whole thing does shake out as we move forward.
Whoops. I'm going to do, before we jump around, because they usually have the full breakdown, let's just surmise it one more time. Where are we? There we go, the top live, and that's the breakdown I wanted. So we had a Bloomberg survey estimate that was 2.89. The median analyst estimate only was 1.5, so even a bigger surprise if you're looking at that number. Coming in at just shy of 8 million barrel build. Cushing crude, 1.6 million barrels. Pad 3 crude, that's probably the big number right there. 6.5 million barrel build in Pad 3. Gasoline, quite a miss to the other side, though. Looking for a build of 1.2 million barrels. Gasoline coming in at a decline of 459,000 barrels. Scroll back up. Distillates, pretty close. Decline of 1.7. Looking for a decline of 1.2. And they break down a lot of numbers in this EIA report. They're talking about, of course, demand. They're talking about every type of energy you're looking at. And as we saw, the price of so everything in the red on a massive crude build. Gasoline stocks drew, but prices are still being weighed down just because of the dramatic effect. And one more look at the market, just kind of hanging there. We'll check back in.
We're going to go back over to the oil market. Where do you see this, folks? Okay, this is hard to comprehend, actually. As we were just talking with Teddy, we were watching oil simultaneously.
So back to the oil market.
Oh, my God.
Quite a number, man. So, of course, the number jumps from 75 down to 74.32 on the news. We are now back above where we're trading at. Oil actually climbed to a high of 75.37. You just traded $1 higher in the span of that 10-15 minutes. What would have happened if we had a draw in oil, if we missed to the downside, right? I mean, this market just continues higher, and that's just why I made that point in terms of saying, you could always take money off if you really felt that oil just, you know what, it's going to shake off that big of a build, and it's going to trade higher. If you had closed out the bearish trade, you still have the bullish trade now, and basically you would have covered your complete trade. Everything above $75 becomes profit. But, man, guess what? We're only 15 minutes into the trading day after that number, and you'd have exposure for the dailies until 2:30. We might be back under $74 by the time we're there. We might be back above 77. Who knows, man? Today could be a big day.
Because what does happen, so picture this, folks, if you're a fundamentalist, right, you had plenty of oil out there. It would make sense. You saw it gap down. It's like, okay, you sell oil, man. The oil's out here. If you're a technical guy, what ends up happening, you're still selling oil. Then all of a sudden it reverses, like, oh no, you got to close the position.
Sure.
And, you know, so the volatility's there, man.
That is for sure.
That is a pretty intense move, man.
It is a pretty intense move.
Holy
yeah.
cow.
We'll check back in one more time, maybe during the hour, and who knows where it's going to be then.
Yeah.
We'll find out.
Exactly.
Definitely. So as we approach the 11 a.m., let's check back one more time in the price of oil. So sitting at 75.28. Of course, we got almost an 8 million barrel build. It's 10.56 right now. We got that number at 10.30, spikes down to 74.32. We're now a buck higher from that level. It will just not back off. We'll see where that shakes out. If you made a volatility trade, you're probably liking the action. You need some more action, though, because $75 was kind of your middle. So you'd be looking for some acceleration, and you just might get it with plenty of time left.
Totally.